Hello, options traders. I hope everyone is having a happy holiday season. So I want to share a trade with you here. Again, all trades I always recommend they're in paper. This is all about learning and education. But I'm going to share a premise I have with you, and then I'm going to share a trade that I'm putting with that premise. So this is going to be part of the ongoing trade, basically the start to finish series. So let's take a look at a chart here. So here's my premise. If we take a look at the SPY, these are weekly bars here. Normally I'm showing daily bars. I'm showing weekly bars here for a reason. The weekly bars basically show that we had a prior high in our market. Now this was an all-time high, excuse me, of roughly 480 in the SPY. We are bumping right up against that all-time high. Now, ultimately, I think that a month or so from now, the market is likely to punch through that all-time high and make newer highs. That said, in the meantime, in the short term, I am expecting one of two things. I'm expecting either some sideways chopping here in the market or possibly a little bit of a pullback, maybe down here to this, 460 range, possibly even lower than that. So again, short term, in the next couple of weeks or so, I might expect a little bit of a pullback. Longer term, I'm expecting a probable breakout to new highs. That's just what the technical analysis is telling me right now. So if that is my premise, let's take a look at how I might build a trade around that. Now, I don't want to go with a totally bearish trade because my opinion isn't totally bearish. I'm expecting either sideways chop or potentially a little bit of a pullback. I don't want to do anything that's going to be a bullish oriented trade. So I'm looking for something that might be kind of something that I can model how I want, and a likely scenario for something like that is either maybe an iron condor or an iron butterfly. Now, I happen to love trading butterflies for a host of reasons, so I'm going to go with a butterfly. I'm going to go out here to about January 12th in time, so about 16 days to expiration. Not a huge amount of distance here. I want to do this in SPY. So this is what that trade structure under normal circumstances would essentially look like. I'm going to go ahead and show it at expiration so it's a little more vivid here. Now, remember though, I said that my expectation is likely a little bit more either chopping sideways or potentially a pullback. Right now we're trading right around the 476, 475 range just because 475 is kind of centered. I'm going to go ahead and make it 475 there. And also, you'll notice that now my downside wing here is only 4 points. This wing is 4 points, where this wing here is 6 points. So what have I done here? Well, I have more upside risk in this trade, and I have ultimately zero downside risk in this trade. For my premise, that's perfect. That's exactly what I'm looking for. Again, if you remember my premise here, my premise is that SPY is at what's going to be probably an intermediary high in the 475, 480 range, where this is likely to just chop sideways. Again, personal opinion here. If that happens, that 475, 480 range, I'll be okay. Now, I may even want to shift this a little bit. I know I shifted this to 475, but if I'm a little more concerned about that 480 range, well, I can shift this up a little bit and move this a little further out. So again, you can see I can model this any way that I might want. So here we're, let's see, what is that? About 9 points. I don't need to be that far away. And then this one I can bring in a touch closer. So maybe this is kind of a similar configuration right here. but it gives me a little more upside room if I want to have that room all the way up to 480. Again, I still have zero downside risk on this trade, but I'm not making as much if the market totally tanks. In this particular case, this model is going to be a little more figuring that the market is going to end up in this general range. Now, again, this is my P&L at expiration. Let's just back this off a little bit and take a look at what this thing might look like, maybe 10 days in or so. I guess that's 11 days in. So if we look at 10 days in, this will be the P&L if the market stays around this general area. We can see that this trade is a little bit negative delta. Now, if you're on the free version, you're not going to see all this, but if you move to the paid version, you will actually see the deltas in this trade. So this is a slightly negative delta trade, which means it's going to benefit a little bit if the market moves down. We can also see that the theta decay here is 3.68. So it's going to be basically giving me, all things being equal, it's going to provide about $3.60 a day to me in theta decay. Now, that's a theoretical number. That is not a number that automatically appears in your account. It's basically mathematics, modeling that's taking the amount of decay that's going to ultimately happen in here and saying that if this thing stays where it's at, that's going to be kind of the average benefit to me on a daily basis. Again, theoretical number, but it's the best we have from a mathematical perspective. So, if I like this general setup, if this trade fits my premise, which it does, I'm going to go ahead, I'm going to save this trade, and I'm going to save it as neutral to bearish iron butterfly. And I'll make a note here. I was interested in a neutral to bearish trade, and I guess that's really all I need, and this is going to be in the start to finish series. I'm going to save this trade, copy that link. I'm going to provide the link to you in the description down below. As always, please like, subscribe, give me any thoughts or feedback there. Any of that information helps me in determining what you want to know going forward. So thanks so much, everyone. And as we're coming into the new year, I wish everyone a happy new year. And we'll probably see you maybe later this week or early next. Take care.